From FXEmpire, this is Chris taking a look at the silver market for 2024. Looking at this chart, it was very similar to a lot of, like the euro dollar, Aussie dollar, those types of markets. This was driven all by the dollar. And although there's a couple trading days left, 2.5, roughly three trading days left in the year or so as I record this, we're basically unchanged. With all of that momentum, we're unchanged. And why is that? Well, the market's been focusing on interest rates. The Federal Reserve looked like they were going to raise rates, and we plunged. There was this belief that they were going to cut rates, and we rallied. And then we plunged again, only to turn back around. This is all about the Federal Reserve and interest rates. But there is another dynamic that you have to take into account when it comes to silver, and that's the fact that it is an industrial metal. So as the Fed cuts rates, the idea is that perhaps the demand for silver will rally as more money is thrown into business, capex, that type of thing. But what if they're doing it in a sense of panic? And there is the possibility that they see something out there that the rest of the world doesn't. It might not just be a matter of, oh, we're beating inflation. Let's try to organize a soft landing. Let's be honest here. The Federal Reserve has a batting average of 0 when it comes to timing the economy. Like, I don't think going through history, I cannot think of a time where they got things quite right. So I'm just going to go with what history tells me and assume they're going to screw it up again. That being said, there's an obvious resistance barrier at 26.20 or so, as you can see by this ellipse I'm drawing. If we break above there, we could go to the $28 level up here. I don't think we go any higher than that. And the reason is, I think that even if we do take off to the upside, sooner or later, people start to worry about the global economy. More likely than not, my outlook for 2024 is we're going to have a very similar range. And in fact, you could say that we may just continue what we've been seeing for 2.5 years, with the occasional exception. But really, I mean, you can make the last 2.5 years between 21 and a half, maybe 21 and 26. It's where we've been for 2 years. There was the little bit of a breakdown and people bought it as value. So maybe we overshoot this year and go to 28, but I think that's as far as it goes. I would anticipate a very range-bound year. You can take this and extrapolate it to a daily chart and just trade accordingly. If things change, you'll know. And then you can trade then. But I look at this as very much likely to be a range-bound year, especially as there are so many moving pieces out there when it comes to the geopolitical risk, which is good for silver if the riskier it gets. But political risk is one of the things that helps. Interest rates dropping is another. But if interest rates drop due to global economy slowing down, well, that's not good for silver. So it really comes down to the speed in the bond markets. It's all about the bond markets.